I love seeing some of the more mainstream firms get involved here, like BlackRock. And
Headlines like these are becoming much more common as traditional finance is coming to realize there's now a race to accumulate the most Bitcoin. And regardless if you're ready for it or not, the great accumulation has begun, and here's what you need to know to prepare yourself. Over the past week, Bitcoin has ripped from over $25,000 to $30,000, jumping over 22% in the markets. Now, a lot of this is coming because traditional finance is coming in and taking over the markets. And now we're sitting at a very critical level, very psychological level of 30,000. It's broken out of this downtrend, and now at this point, it sits at a very crucial level of 30K because there's some important things that we need to cover. Now, the first thing that I want to get into is why it's stalling at this $30,000 price range. Obviously, we've had tons of news, so a lot of this drive can be because like in the background, a lot of these institutional investors are buying up this Bitcoin, but also the mass media is starting to see these headlines, things where BlackRock, Fidelity, Charles Schwab, Citadel's all getting in, and nobody wants to miss the boat. So everyone's trying to accumulate as much Bitcoin as they possibly can before these institutions really take over. Now, one thing we do have to remember, though, is even though there's a lot of hype around the markets, there are still critical levels that we need to be cognizant of. Now, the first one is obviously this $30,000 level. Now, if we take a level from basically the top of the wick back here when we reached 30,000 in April, mid-April of this year, you could see that it rejected pretty heavy, and then we started this downtrend for the next couple of months. Now we're at this critical level, and you can see that we've already had one massive wick, and the daily candle for today is also looking like it could possibly reject this level. There's many reasons behind it, but even if we look more left, you could see that this is also a pretty critical level when we were falling all the way back in May of 2022. So 30K has some extreme relevance, and I think as we sit right now, this is looking like a very possible future manipulated spot in the shorter term markets. And what I mean by that is when we take a look at basically Bitcoin and its price, if you look on the short term and you're talking about more so day traders and swing traders, you'll see market manipulation happen more often than on the bigger time frames. And basically what I mean is, okay, so let's take this for example, right? We had this massive mark up in price for Bitcoin from all the way down here, 20,000 to 28,000, right? That's a pretty big price jump. And then what we did was we kind of set this floor in Bitcoin's price. Well, if you extend it out here, I'm sure there was a lot of people trading their supports, or, they had margin trades, and below this support level right around here, they had their stop losses. And obviously Bitcoin's trading, consolidating, and then out of nowhere, this wick comes and takes out all of these traders right around here. Could be due to large whales, institutions, because we know institutions are getting into Bitcoin. And so this price wick right here is a big reason that you need to be aware of these price zones, because market manipulation happens around here. Now, let's say you take this out again and you make this the new floor. Well, what happens is before you even know, you see a massive floor building for Bitcoin, and a lot of people find a lot of conviction in this. And so they're saying, okay, we found the floor for Bitcoin at 25,000 and we're going to rally up to 30,000. Well, that's true. But before that happens, we need a massive wick down, taking out a lot of this liquidity right around here, and then we rally up. And so we could see the opposite happening probably pretty soon here at 30,000, where we have this wick right around this area. And it wouldn't be any surprise to me that if we get some price action where it looks something like this, where we kind of consolidate, we get a massive wick up, and then on the shorter time frame, we come back down in the short term. Now, I think we all know in the long term, Bitcoin's price is going to do low. But in the short term, I still do believe that even with all this hype around traditional finance taking over Bitcoin, I still think we're going to get one more drop to the downside below here, below 25K. Why? Because even though a lot of these types of headlines are coming out, we're still several months away before the first Bitcoin ETF is actually approved. So while the headlines and the hype are there, obviously we're still months away from any actual progress coming out in terms of that. And I think one thing you have to keep in mind is that these traditional finance players are not on your side. What they're trying to do is they're opening up Bitcoin spot ETFs so you can buy crypto and Bitcoin on their exchanges. And remember, at the end of the day, if it's not your keys, it's not your crypto. And so even if you're holding or buying crypto on these Bitcoin ETFs, which a lot of people will be doing, they're going to own all of that Bitcoin at the end of the day. Now, another really important thing that I think we need to look into is maybe some people were saying that this rise to 30K was a short squeeze, but when you look at the data, when you look at the short squeeze ratio right around here, you can see that the price of Bitcoin shot up by 22%. However, the short squeeze ratio stayed very, very low. And so this is not a short squeeze scenario, but this is just a lot of liquidity coming into Bitcoin. Now, I want to jump into a little bit of how traditional finance is taking over crypto and the steps that they have been making recently. Now, we obviously know the SEC has clamped down hard on crypto giants, and now traditional finance, coincidentally, is filling the gap. Obviously, we know Citadel, Charles Schwab, and Fidelity launched new crypto exchange yesterday. BlackRock has already filed for their ETF, and Deutsche Bank wants to offer crypto custody services to their clients. Now, Citadel, Charles Schwab, and Fidelity are all working together to launch a new platform called the EDX Markets. Now, this is what you need to know. First off, it won't hold your crypto. It's going to operate like a stock exchange where they're going to execute trades for you, and the platform is going to price everything based on an order book. It's also geared towards institutional investors. So if you're watching this video, odds are it's not targeted towards you, and they're only going to offer certain assets like Bitcoin, Ether, Litecoin, and Bitcoin Cash. However, they're not just targeting institutional investors, even though that's where a lot of the money is going to come. A lot of other companies like BlackRock, Deutsche Bank, Invesco, Wisdom Tree, and all those, they're going to be offering a lot of crypto services to the general public because they understand there's still a lot of money and a lot of mass media or a mass public that hasn't gotten involved because we're so to say we're still in that crypto winter because we're still sitting at 30,000, which is a great price for Bitcoin, but far off, more than 50% off from our all-time high. So to say that, everyone's in crypto right now or is still interested in it is, just not the truth. Now, one thing I think we need to point out is that while the SEC and basically the whole legal system has hit crypto companies extremely hard, it'll be really interesting if the SEC approves BlackRock's Bitcoin ETF and not Grayscale's. Because remember, Grayscale went for their Bitcoin ETF over a year ago, and it got denied for whatever reason the SEC wanted to make up. But a more legitimate traditional finance company like BlackRock is trying to do the same exact thing, and it'll be interesting if they get the approval before Grayscale. And that right there will basically be the nail in the coffin to say, yes, these banks and the legislation or the SEC have been working together behind the scenes to basically make sure that they can get into Bitcoin and eat up the rest of this supply. Now, obviously, there's pros and cons to both of this. One of the pros is that if institutional money gets into Bitcoin, it's going to raise the prices up substantially to the point where it's going to break out those all-time highs pretty easily. And it's going to help with mass adoption because of regulations and also just traditional finance getting involved. However, some people are saying they don't like how entities like BlackRock, Fidelity, and Citadel are going to be controlling technology that should be decentralized. However, when we look at the circulating supply of Bitcoin already, we can see that there's already 19.4 million Bitcoin mined into existence, and we know there's only supposed to be 21 million in existence. So there's over 92% of the Bitcoin already mined. We already know that, let's say, 2 to 5 million are lost in wallets and just kind of in the cosmos. And then another, I think like 70% of that supply is owned by people who haven't even moved their Bitcoin in over a year. So the supply is going to be extremely small. And when traditional finance does come in, and let's even say they buy up the rest of it, depending on how long ago they were buying it, they're not going to have much of the supply. And so it's going to really come down to what price are people holding Bitcoin comfortable to selling to these massive institutions. And one other concerning thing that I have is that if we start to look at basically the traditional crypto companies like Binance and Coinbase and all of them, they're getting hit hard with regulatory woes. And you could see that Bitcoin's price spiked to 138,000 on Binance.us. And it's because the exchange's market depth, or their liquidity, has declined nearly 80% in the past month on regulatory woes. Now, if you take a look at their order book, obviously the chart looks very small with the candlesticks, but that's because this wick went all the way up to $138,000 for one Bitcoin. And of course, that's not because one person wanted to pay that much money, but it's mainly because their liquidity has been draining. And so you have to ask yourself, is this also a plot by the SEC and these traditional finance banks where they're making it extremely risky and harder for these crypto companies to do business? And so it's going to push a lot of people towards traditional finance where, let's say a BlackRock offers the same exact exchange like Binance. However, they have more liquidity and they're a little bit more trusted by everybody. Which one are you going to pick at that point? So maybe they're trying to force out the competition and, again, take the market that way as well. Now, another thing that I think is really important to understand is the Bitcoin dominance. Now, when we're looking at this is basically how much of the cryptocurrency market cap does Bitcoin hold. As of right now, the entire cryptocurrency market cap, 52% of it is just Bitcoin's market cap, which is absolutely incredible. And I think it's going to continue to rise at this point because, one, these traditional finance companies are more interested in really Bitcoin than just the cryptocurrency market in general. So they're going to be pouring a lot of their money into here. And another thing we need to realize is that if more money is getting poured into Bitcoin and it's being seen as like this blue chip or safe haven, obviously dominance is going to continue to rise and go up. But that also means there's going to be more of an altcoin reckoning, or basically everything else in the cryptocurrency market, prices are going to continue to drop because everything is going to be funneled into Bitcoin. And at that point, maybe into the early parts of 2024, once we start to see the Bitcoin bull market, that's when altcoins will reach their lows. But until the time being, if you're in altcoins, it just doesn't make sense. There's no return possibility. It doesn't look promising for any altcoin at this time. And I think you're just better off getting out of altcoins, right? Because until 2024, at least my personal views, I don't think we're going to see any altcoins pump, at least in the long term. And as far as how high we can go in Bitcoin dominance, if you look left, you could see this major gap in terms of Bitcoin dominance. And the last time that we were anywhere close was around 58 to 60% dominance. Now, can we reach there again? I think absolutely so, especially with all the narrative behind Bitcoin. Who really knows where the Bitcoin dominance is going to go at this point? But I think we just continue to rise and rise and rise. And again, more money's getting funneled out of altcoins, more money's coming into Bitcoin. The dominance is going to shoot up, and so is the trust behind Bitcoin as well. But that's everything I had for this video. I hope you guys found it helpful, and I hope you guys enjoy these videos. Till the next time, I'll see you then.